All right, today we are talking about a single number, an invisible number really, that has this massive, massive impact on your life. We're calling it your financial GPA. Let's get right into it. So, let me just kick this off with a question. What's the one number that, maybe you don't even know it, is secretly controlling some of the biggest financial moves you'll ever make? And no, it's not your age, it's not how much you make, it's something else entirely. Okay, so what is it? It's your credit score. Yep, you can think of it as your secret financial score. It's kind of like this hidden gatekeeper that's quietly shaping your entire future. And when I say its influence is huge, I mean it. We're talking about the interest rate you get on a car loan, whether a landlord is going to hand over the keys to that new apartment. And believe it or not, in some cases, it can even be a factor in whether you land a specific job. This one score is just incredibly powerful. So what's the deal with this mystery number? Let's decode this thing and figure out exactly how it's calculated. You know, at its core, a credit score is really just a number that tells lenders how trustworthy you are. That's it. It's basically a prediction of how likely you are to pay back money you borrow. Simple as that. And honestly, the best way to wrap your head around it is to think of it just like a GPA, a grade point average, but for your finances. It's one single grade that sums up your whole financial performance. And this is where that whole GPA analogy really starts to click. Look at this table. It maps the score ranges directly to the grades we all remember from school, right? So if you've got a score between 800 and 850, boom, that's an A+. You are at the top of the class. But if you drop below 600, you're getting into D or F territory. And that means you've got some serious work to do. So who's the one handing out these grades? Well, first you have the credit bureaus. Think of them like the school administrators. They're the ones collecting all your records. And then you have the scoring models, like FICO and VantageScore. Those are the actual grading systems they use to come up with your final GPA. Okay, so if this whole thing is a GPA, what's on the test? What are you actually being graded on? Well, it turns out your score is built on 5 big factors. This chart gives us a fantastic visual of the 5 subjects that make up your grade. And I want you to notice something right away. See how 2 of them have way more weight than the others? Let's break them down one by one. Okay, the biggest factor by a long shot is your payment history. This is your most important class. It's worth the most points, and the question it answers is super simple. Did you turn your homework in on time? Every single late payment is like turning in your most important assignment late. It really hurts. Next up is something called credit utilization. Now, that's just a fancy term for how much of your available credit you're actually using. The key here is you want to keep this number low. Maxing out your credit cards, that's kind of like cramming and pulling a all-nighter right before the final exam. It just looks risky to the people grading you. Factor number 3 is the length of your credit history. See, lenders love to see a long, established track record. It's like being a student who has gotten good grades consistently for years and years, not just for one semester. It shows that you're stable and reliable. Then you've got your credit mix. This is all about showing you can handle different types of financial subjects. Can you manage both a credit card, that's revolving credit, and also an installment loan, like a car loan? It just proves that you're versatile. And finally, number 5 is new credit. Opening up a whole bunch of new accounts in a short amount of time can actually hurt your score. It can make you look like you're financially stretched thin, kind of like a student who's frantically applying to 20 different colleges at the last minute. It just screams risk. Okay, so now we know what the score is and how it's all calculated, but why does any of this actually matter in the real world? This is where it gets really interesting. This slide just shows the real world cost perfectly. Let's take a look at Alex and Ben. They are buying the exact same car. But Alex, who has a good score, gets a nice low interest rate. Ben, on the other hand, with a poor score, gets a really high one. Over the life of that loan, Ben is going to pay thousands, literally thousands of dollars more for the exact same thing. That's the power of your financial GPA. And you know what? It goes way beyond just loans. A poor score can mean getting turned down for an apartment, paying way more for car insurance, or having to put down a huge security deposit just to get your lights turned on. It really does seep into almost every single corner of your financial life. But here's the good news. You are in control of this. This isn't some test you can't study for. So let's wrap this all up with a simple study guide. 3 rules to absolutely win this game. All right, let's focus on what really moves the needle. Rule number 1, pay every single bill on time, period. It is the biggest part of your grade, so don't mess it up. Rule number 2, Keep your credit card balances low. We're talking well below 30% of your limit if you can. And rule number 3, only apply for new credit when you actually need it. That's it. If you can master these 3 rules, you are well on your way to getting an A+. Look, your financial GPA isn't something that's set in stone. It's being calculated right now, today, based on the decisions you're making. So the question is, what's your next move going to be?